I might mention that there's a really truly terrifying candidate in the weeds,
Hmm.
Mark Carney.
Ah,
The
yes.
for
He was the head
the,
of the Bank of Canada, wasn't he?
he was the Bank of Canada, and
And
for
the
his
Bank of
sins,
England.
he was chosen to run the Bank of England too. I would suggest that he's sort of the World Economic Forum candidate, and I say terrifying. Uh, I'm always more afraid of a highly competent statist than I am afraid of a statist clown like Trudeau. My hope is that the Canadian voters will choose a different style of governance for a while, but there's always the chance that the Canadians could decide to snatch defeat from the jaws of victory. We'll see.
You're watching Capital Cosm. My name is Danny, and today's guest is the one and only Rick Roll. Rick, thanks so much for coming back on the show, my friend.
Danny, it's a pleasure. I enjoy these interviews. I enjoy talking to your audience, at least vicariously through you. So thank you for having me back.
Yeah, definitely. Thank you for coming on. Well, let's just, without any further ado, Rick, let's just dive right in. What is front and center for you at the moment? What is occupying your radar screen? What do you want to talk about to kick things off here in 2025?
Well, the most topical thing for me was the announcement today by Justin Trudeau that he is departing as Prime Minister of Canada. You know, Danny, from prior conversations that I'm not fond of any politician. Uh, but I regarded Mr. Trudeau as being particularly odious. Uh, and I think, in particular, his self defeating energy policies, uh, which might now end as a consequence of his leaving, were harmful to his country and to the energy industry in Canada. And I see the possibility, in fact, the probability, that a new regime in Canada will have much more realistic attitude, towards fossil fuels. And I think over the course of 2 or 3 years, that this could result in pretty interesting profit opportunities for speculators. Mr. Trudeau didn't seem to see, or at least said that he didn't see, any business case for the export of Canadian natural gas to European customers, despite the fact that the customers saw an extraordinary business case and asked him on numerous occasions to facilitate that. To put it in arithmetic terms, the Alberta gate price for natural gas was frequently in the $2 Canadian range per million British thermal unit, while that same gas landed in Rotterdam or Shanghai was priced at about 13 Canadian dollars per million BTU. And it cost $2.50 or $3 to get it from Alberta to Germany. The idea that that sort of gross margin, which is to say $4.50 cost as opposed to a $13 selling price, didn't seem like a business opportunity to the Prime Minister, is astonishing to me. And I think similar opportunities exist with the debottlenecking of the transmission of heavy Canadian crude, particularly sour crude, from Alberta to the U.S. Gulf Coast, where it is or where it could displace heavy Mexican and Venezuelan crude. So I think the opportunities in the Canadian oil and gas space uh, will be extremely attractive in the next 2 or 3 years as a consequence of uh, Mr. Trudeau's decision to vacate the Prime Minister's office.
Interesting. And while we have you in political mode at the moment, I want to get your thoughts on Donald Trump's recent comments about making Canada the 51st state. What do you make of that? Is that something to be taken seriously? And
Uh,
what are your views on that?
I don't take much of what politicians say seriously. I also think that Mr. Trump probably enjoys being outrageous. I think that he was probably elected as a consequence of his ability to voice the frustrations of part of society efficiently. And I think these offhand remarks about Canada, about the Suez Canal, the Panama Canal, Suez Canal's next maybe, and Greenland are more an attempt, his own crude attempt at humor to his constituency than they were policy prescriptions. In other words, I think he was having fun. He was communicating with his base in the same way that you and I might after 4 or 5 beers.
I see. And now, really quickly, I want you to explain to the audience who may not be Canadian what happened. What happens after Trudeau leaves office? Who is the most likely replacement in your view that
That's a
takes Trudeau's place?
that's a very interesting question. Before I get too hopeful as to whom, well, I need to say that the conservative leader, Polyev, is way, way, way ahead in the polls. I'm not so sure that he's ahead in the polls because people are inordinately fond of him, as much as the fact that they were sick to death of the prime minister, of
Right.
Trudeau. It's worthy to note that in Canada, what I call the consolidated left, the Liberals, the NDP, the Greens, and the Bloc Québécois traditionally command about 60% of the popular vote. And a minority government that represents the left has to look like a distinct possibility, given the apparent popularity in Canada of the broad policies of leftist politicians. Canadians do, on occasion, when left with no other alternative, decide to vote in a way that can restore the Canadian economy. The 14-year, I think it was, reign of the prior conservative, Harper, is just that. When the country returns to solvency, of course, then very often the Canadian left reasserts itself with redistributionist policies. My hope is that Canada is in for 10 years of a government that will be more attuned to the economy and less attuned to the sort of woke leftist narrative. But that, of course, is up to the Canadians.
Right. Well, let's go ahead and
The
shift over to the. Go ahead.
well, the immediate process will be that they need to determine who the successor is and whether that successor can win a confidence vote in Parliament. In other words, will the leftist coalition, the Liberals, the NDP, the Green, and the Bloc Québécois, agree on a successor to Trudeau who can carry on without having to call an immediate election? If that doesn't happen, then you have this general scramble, an election, Polyev versus whoever is chosen. I might mention that there's a really truly terrifying candidate in the weeds, Mark Carney.
Oh, yes. He was the head of the Bank of Canada, wasn't he?
He was the Bank of Canada, and for
And the
his
Bank of
sins,
England.
he was chosen to run the Bank of England too. I would suggest that he's sort of the World Economic Forum candidate, and I say terrifying. I'm always more afraid of a highly competent statist than I am afraid of a statist clown like Trudeau. My hope is that the Canadian voters will choose a different style of governance for a while, but there's always the chance that the Canadians could decide to snatch defeat from the jaws of victory. We'll see.
Interesting. And if Poilievre does get in, which, like you said, he is ahead of the polls right now, but that could easily change given this, the changing circumstances here. What can we expect from him?
I don't know in many senses. The last conservative government, the Harper government, did not reduce the role of government in Canadian society. They only reduced the rate of government growth in Canadian society. They didn't stop spending, they just stopped the increase in spending. And my suspicion is that Polyev will have to continue with some fiscal measures that are populist. My hope is that merely constraining the growth of government while allowing the economy to prosper will increase the private wealth of Canadians for the next decade. I think that the impact of a conservative government in Canada on the energy industry, and probably in extractive industries generally, would be very positive. I think that removing the non-judicial obstacles to resource development and to transmission would be beneficial. Beneficial to the potash industry, beneficial to the oil and gas industry, beneficial perhaps to the resource development in the Canadian Shield in Northern Ontario, and beneficial to the Canadian agricultural industry. But we'll really have to see about that. It's worthwhile to note that Mr. Poilievre comes from Alberta, which is to say that his background is in an extractive economy. Mr. Trudeau's background was sort of as a member of a family that was part of Canada's Laurentian elite, and hopefully a change of guard inures to the benefit of working Canadians.
I see. Well, let's go ahead and shift over to the markets now, Rick. We have been seeing the markets continue to rip up on higher, for now at least. And it's not just the broad market, it's also energy prices. You're seeing gold with that $75 handle. You're seeing natural gas up 8%, spiking today. I believe it was at 370 the last time I checked. So, and you also have the uranium sector beginning to catch a little momentum there as well. What's going on with the energy sector right now, and why now?
I think in oil and to a greater degree natural gas, what you're seeing is a bounce off an unrealistically low base. You need to decide whether oil is up 10% or if it's only down 15%, having been down 20 or 25%. And natural gas, you have the same circumstance. Natural gas is overproduced throughout North America as a consequence of its being produced as a byproduct from oil production. And sometimes the natural gas price has gone sub-zero. In other words, you had to flare it, you had to get rid of it to produce the oil. That circumstance, where natural gas on an energy equivalent basis is pathologically cheap, has produced a market response. European gas consumers, as an example, are relocating as fast as they can from Germany to the U.S. Gulf Coast so that they can make the products that they do out of a cheap substance. We're investing in natural gas storage, natural gas transmission, natural gas liquefaction. Billions of dollars every month are being spent in North America to take advantage of the arbitrage afforded by very cheap natural gas prices. And so the market is starting to work. The cure for low prices, while it's messy, is always low prices. And having extraordinarily low natural gas prices for 5 years has led to billions of dollars of investment to take advantage of that. And that's starting to work. That isn't to say that gas prices won't fall for a while from here. They easily could. But over time, the writing is on the wall. With fossil fuels, too, there's a broad-based public perception spread by the big thinkers, Biden, Merkel, Trudeau, people like that peak oil demand is going to occur in 2030. But it's not. All you have to do is ask yourself commonsensically how all of those big thinkers would fuel all their private jets when they flew to Davos to tell you to drive less. They do it with fossil fuels. My suspicion is that the time of peak demand for fossil fuels is probably 2060, 2065, likely after I've shed my mortal coil. But the industry has been priced, at least in terms of equity and cost of capital, as though it's a sunset industry and it's going to go away. That isn't true. The industry in North America not just North America, pardon me, the industry globally, according to the International Energy Agency, has been underinvesting in sustaining capital around exploration and production to the tune of $1 billion a day, $365 billion a year. And that underinvestment in sustaining capital investments in many parts of the world is beginning to impair the domestic industry's ability to produce. That underinvestment has not happened in the US. The consequence of that is that a very, very, very mature uh, geological locale has doubled production in 15 years. But the success that we've enjoyed in the United States is not a success that has happened in other parts of the globe. Places like Venezuela have seen 85% declines in their productive capacity. Mexico has seen a 75% decline in its productive capacity. And the sustaining capital drought that we've seen in terms of exploration production is just beginning to be felt, pardon me, in the reduced capacity surpluses that consumers have enjoyed for the last 5 years.
Interesting. But why are we seeing energy prices move in tandem, though? I mean, much to your point, we are seeing oil move, we're seeing natural gas move. As I alluded to before, you're starting to see the uranium sector, the uranium equities move, catch a bit as well. What is the mechanism that's causing them to move all at once, though?
I would suspect that they're unrelated. I
Okay.
would suspect that what you're seeing in the uranium business isn't necessarily to be conflated with what you're seeing in the oil and gas sector. What is really happening in uranium is that we had an enormous surplus that was built up when the Japanese nuclear fleet shut down. The second largest consumer in the world went offline. So you had 30 something million pounds a year that went to demand heaven. It just built up by way of inventory. And we had to work off that inventory. And we've begun to do it. The extraordinarily low prices that humankind enjoyed for uranium led to rampant construction of nuclear power plants, particularly in China, which has increased systemic demand. And now the Japanese, as opposed to taking their plants offline, are bringing them back online very quickly. That has two impacts. It increases demand for uranium, but it also reduces the inventory held by Japanese utilities for resale. That's very, very important. There is also a sea change in social and political support for uranium. 5 years ago, people like me, who were uranium investors and speculators, were vilified. We were identified with Hiroshima, Nagasaki, 3 Mile Island, stuff like that. In the Inflation Reduction Act, they decided to subsidize us. That's a sea change. Now, to be honest with you, Danny, I felt cleaner when they vilified me than
Hmm.
I do now that they're subsidizing me.
Right.
But the market doesn't have my moral code. The market looks at the fact that uranium is all of a sudden the flavor of the month, and that we've gone from enormous above ground surpluses to much smaller surpluses in the face of much stronger uranium demand. And that's really changed the outlook for the material. The other outlook that's changed is that in uranium, unlike any other natural resource commodity in the world that I know of, producers and consumers can enter into long-term contracts. This is important for the producers because it takes away the tyranny of the spot market. It allows banks, as an example, to understand how much uranium a prospective producer could sell and at what price for a long enough period of time to amortize the loan. This will absolutely, positively both increase the amount of capital available to the uranium industry and make it available on better terms. Similarly, for lazy old analysts like me, when you're attempting to do a net present value calculation around a uranium deposit or a uranium company, having the ability to reference contract terms rather than try and estimate what the spot price of the product will be over 15 years will make net present value calculations enormously more accurate and enormously easier. And that will perhaps not in 2025 or even 2026, but within the next 5 years, greatly reduce the cost of equity capital to the uranium industry, the certainty that's afforded by understanding the price and volume that a producer can enjoy over a longer period of time makes uranium unique among mined commodities.
So do you see this recent rally in uranium as just being a transient thing? Is it, or is it a harbinger of things to come for the rest of the year for the uranium sector? We have, I mean, I see you quite frequently on Twitter, Rick. I mean, I would believe that you have a good grasp of sentiment from what you see on your feed. But on my feed, I just see despair and depression when it comes to the uranium space. Sentiment is not good. Have we hit a rock bottom in sentiment? And in doing so, have we bottomed out in the uranium equities?
I'm not ducking the question, Danny. I have no earthly idea.
Hmm.
I don't even know how to dress myself. So, in terms of somebody who would analyze the impact of a narrative on a market, I'm the wrong guy. And I also don't think in 12-month terms. I think in 60-month terms. To me, the trends in motion are such that I'm going to be able to make some extremely solid speculations in the uranium business. Whether or not they pay off in 2025 is a very different question. It's odd, Danny, that as I've become older and I have less time on Earth, I've become substantially more patient. It isn't because I'm a masochist. I wish that immediate gratification was on offer, but I've been a speculator for 50 years, and I realize that having a longer term time perspective is the only method to success that's on offer.
It's the fidelity
So,
study.
it's interesting that many of the people that both you and I communicate with on X have a long-term narrative. They've invested in shortage. They've invested in the narrative around small modular reactors, all that kind of stuff. But while they have a long-term narrative, they have short-term tactics. And that dichotomy is why they're unsuccessful. If you are investing in a 5-year thesis and you have trouble holding stock over a long weekend, it's pretty obvious that your technique obviates the probability of success.
I see. Well, I want to shift over to the other yellow metal, which is gold. I know you have your big gold boot camp coming up on the 11th, which is this Saturday. So I want to get your take though. Why are you focusing on gold right now? Hasn't gold seen its big move in 2024? Is there still juice left in the tank for gold? And then if you could just walk us through what people can anticipate at the gold boot camp you've got lined up.
Three questions in one, so let's try to deal with them
Sure.
sequentially. My boot camps, as you know, Danny, but many of your audience don't, are quarterly affairs that take a very deep dive into one aspect or another of natural resource investing. We've done uranium, we've done silver, we've done rare earths, we've done royalty and streaming. And the topic that we teach every 90 days is determined by the audience. In other words, we ask them what we'd like to do a deep dive into. And if the request corresponds to a topic that we think that we can construct a course around, we do it. And gold was the overwhelming audience favorite for this quarter's topic. And I think that we can do gold justice. I have been involved in gold investing. I've been involved in talking to gold investors, both physical and gold equities, for a very long time. I've assembled a faculty that I've come to know over 50 years of investing in the space. And I think the need is very, very, very real. When I talk to people who are new to the gold narrative, but don't understand the history of gold, don't understand the interplay between the degradation of conventional fiat currencies, don't understand the interplay between the physical market for gold and the paper market for gold, don't understand the connection between the gold price and the investment prospects of investment quality gold producers and don't know how to segregate between investing and speculation, the need for an 8 hour long deep dive in gold, I think, is very real. I would caution at this juncture your listeners who are only casually interested in gold, what I would call tourists, not to come to the boot camp. For people who buy the newspaper for the comics or the crossword puzzles, this is not the right product. This is not an entertainment product. This is an 8 hour long dense session. It will be recorded so that you will have the ability to play the recordings a couple times because this isn't actually an 8 hour process. We give you enough information in 8 hours that unless you are really deeply prepared already in the gold trade, 8 hours won't be sufficient to absorb the information. You'll really have to devote 24 hours, 3 times 8, which is to say, listen to the presentation and then listen to the tapes. The tapes are timeless. So if this Saturday isn't a good time to listen to the information, you will have the ability to play the tapes as many times as you like for the next 12 months. So if you are really interested in gold as a topic, I think the boot camp is a spectacular product. In
Yeah,
this product, like any other investor education product that I've offered over 28 years, it comes with a, we'll call it gold plated money back guarantee. If for any reason you subscribe for the conference and the recordings and don't think you got your money's worth, just email me. I'll give you your money back. I'm delighted to say in 28 years of these money back offers, I've had to refund less than 1/10 of the tuitions that I've charged. Nonetheless, my guarantee to you is that the financial risk around satisfaction is all mine.
interesting. And so if one were to prognosticate on the current health of the gold and silver market, where do you see us right now?
I see us as being in robustly good health. Sadly, precious metals do well when people are concerned about the maintenance of their purchasing power in more conventional fiat denominated instruments. And unfortunately, I see the next 10 years, while not fatal, as being very challenging for investors. The consequence of that is that I think gold will do well. It's interesting on X, Danny, that many people ask me, when will the gold price finally move? And I say to them, as politely as I can, I think it's going to move in the year 2000.
But hasn't it already moved?
That's my point. In the year 2000, gold price was $253. Now it's $2,700. It's up sevenfold in 24 years. It's up almost 8% compounded. And people don't feel that it's moved. Now, other people will say, have I missed the boat? To them, I would say, hopefully, because gold does well when other parts of your portfolio do poorly. I think that an intelligent investor regards gold first and foremost as insurance, as a medium of exchange that's simultaneously a store of value and a store of value that maintains itself during trying economic times. Why might times be trying? Well, that's math. The on balance sheet liabilities of the United States government, the providers of the most widely quoted medium of exchange in the world, the US dollar, exceed $36 trillion. $36 trillion. And that number is expanding currently by $1 trillion a day, which is to say, we aren't extinguishing the debt, we're adding to it to the extent that the debt in the debt's going up by $1 trillion a day, or pardon me, every 100 days. But that isn't the real problem, Danny. The real problem is that the net present value, not the nominal value, the net present value, the discounted net present value of off-balance sheet liabilities, Medicare, Medicaid, Social Security, federal pensions, military pensions, exceeds, according to the Congressional Budget Office, $100 trillion. So Americans owe each other and others both in terms of bondholders and intended beneficiaries of entitlements, over 120 trillion net dollars. That's a big number, but it gets worse. The IRS suggests that the total private wealth of U.S. citizens is $141 trillion. So we're worth $141 trillion and we owe $130 trillion. This doesn't have a happy ending. How do we resolve this, Danny? Well, I'll tell you what I think. I think we fiddle around the edges with entitlements.
Mm.
We say to an old fat rich guy, say Rick Rule, we're going to remove the cap on the tax that we charge you for Social Security. In other words, we're going to screw you for more than we used to. And we're going to means test the availability of Social Security. In other words, we're going to tax you for it, but we're not going to give it to you. And old fat rich guys are going to be pissed, but that's not going to matter much. There's not many of us. We're going to raise the age at which people begin to benefit from Social Security. When Social Security was enacted, it began at age 65, and the average life expectancy of an American male was 66 years. The average life expectancy of an American male is now 82 years. And that will have to be dealt with. And that is going to make people really, 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 really mad. But even that is fiddling around the edges. Remember that the net present value of unfunded entitlement liabilities is $120 trillion. It's not a cranky old libertarian telling you this. It's the U.S. Congressional Budget Office. I believe that the only way that we honor the nominal value of these obligations is to debase the currency, to inflate away the net present value of the obligations. I lived through doing that once. It was in the decade of the 1970s. In the 1970s, according to the Office of Management and Budget, the purchasing power of the US dollar declined by more than 75%. So the Social Security beneficiary in 1970, who was getting paid $500 a month, was still getting $500 a month at the end of the decade of the 1970s, but only bought $80 worth of goods and services. And I think that's what happens again.
Yeah, so Rick, I mean, we can see the trend that you've laid out for gold. We can see the
Right.
thesis. So for people who have already invested money in gold, let's say, and they want to take their gold, I guess, knowledge up to the next level. I mean, this is where your conference comes in because
Yeah.
you're not only covering the physical market, you're also covering gold stocks, which have more upside, but also have more tumultuous downside as well. So it's extremely important to know exactly how to approach this sector. And yeah, go ahead. Were you about to say
You
something?
make a great point. There's three aspects to gold, very broadly, that we want to talk about. Gold is an insurance and savings asset, physical gold or physical gold surrogates. Investing in gold, which is very, very, very high quality gold equities, which generally have done better than doubling the move in the gold price over time. And then finally, speculating in the junior gold stocks for those people who can handle the volatility and handle the risk. I happen to be pretty good at that. The speculation business has been very good to me. It's not good for all people. And it's important that investors learn how to define themselves as speculators and investors. But we will attempt to do all three of those in the gold boot camp. There will be those for whom physical gold or surrogates for physical gold are the only places that are logical for them in their portfolio. For those people who are investors who want to take a bit more risk in hopes of a bit more reward, we will teach them about the high quality gold equities. And by the way, we'll name them. It won't just be ephemeral knowledge, but rather empirical knowledge. And finally, for those people who want to do more work and incur more risk in hopes of dramatically higher reward, we'll cater to that audience too. You will get out of this what you put into it. We're going to work you very hard for 8 hours. But you'll come out of it, I hope, with more knowledge as to who you are and how gold can serve you as a saver, an investor, and a speculator.
Yeah, and we'll have the link to that, the boot camp down below for those interested. You're going to learn a ton, guys. And if you really want to take your gold knowledge up a notch to the next level and start dabbling with some of these gold mining stocks, and dare I say, even gold junior mining stocks, I mean, these things they can be lottery tickets or landmines, and you really got to know your stuff before getting involved in this sector. So, link down below, check it out. You're going to get an awesome return on your investment when you sign up for this Rickroll Gold Boot Camp. I think we've covered pretty much everything I had stored up here, Rick. Anything else you want to talk about before we wrap up?
Maybe three things.
Go ahead.
The first is something that absolutely your audience will get their money's worth from, because I won't charge them anything. If you like the way I think about around natural resources, and you are a natural resources investor or speculator, go to my website, ruleinvestmentmedia.com. List your natural resource stocks. Sidebar, please no pot stocks, please no crypto, please no tech stocks, just natural resource stocks. And I'll rank them for you for free, no obligation. 1 to 10, 1 being best, 10 being worst. I'll comment on individual companies if I think my comments might have value. The second thing is you can tell by my shirt that I'm a walking advertisement for something called Battle Bank. A group of us who have started several banks over our lifetimes are starting another one. If for any reason you're dissatisfied with your current bank, which I suspect is a description of everybody listening to this podcast, check out Battle Bank. Go to battlebank.com or at Rule Investment Media under questions and comments, just write in bank. If you are an applied investor, never, ever, ever forget the Natural Resources Investment Symposium, the best live natural resources investment conference of the year. It takes place every year in Boca Raton, Florida, or via live stream in the comfort and convenience of your own home. You can find out about that at Rule Investment Media or Rule Symposiums or the Rule Classroom. But don't forget, this July, the best and the finest natural resource investment conference in the world takes place. You can attend it live or you can attend it via live stream. But if you care about natural resource investing, I would suggest that you strongly, strongly consider it. Once again, an absolute gold-plated money-back guarantee. If you attend the boot camp or you attend the symposium and you think for any reason that you didn't get your money's worth, email me and I'll give you your money back.
Are tickets already up for sale?
Yes, sir.
Okay, we'll see if we can get the link
sir.
down below then as well. Great. Well, thank you so much for coming on, Rick. It's been a pleasure speaking with you as always. If you guys enjoyed this interview, then I'd kindly appreciate if you give us a like, comment, go, Rick, go in the comment section. If you agreed with Rick's take, if you disagreed with anything, however, let me know. I do read the comments. So really interested to get your takes here as well. Subscribe to the channel so you don't miss an episode. And it does help us in the algorithm, boost the channel up for growth. And then check us out on Substack. If you want to support us there more so monetarily speaking, you can sign up, become a paid member, and you get access to all of my videos early, ad-free, and for those that warrant it, uncensored. Links to all that stuff is down below in the description box, as well as the pinned comment. And so with all that said, Rick, thank you again for coming. Guys, thank you so much for watching, and I'll catch you next episode. Bye, y'all.